Hello and welcome back to Module 1 of the Stock Market Masterclass, Fundamental Analysis. In the second part of the Fundamental Analysis module, we will look at the different sectors in the domestic market and the companies that each sector represents. We will also identify ways to analyse the health of each sector relative to the other sectors and the general market. In this lesson, you will learn what a market sector is and how they can be useful to an investor. We will learn the GICS sectors in the Australian domestic market. We will look at the major companies that are categorised in each sector. And finally, we will learn how to analyse the health of a sector compared to other sectors. Understanding the different market sectors is very important for an investor to help them conduct useful analysis to enhance an existing portfolio or build a new investment portfolio. In finance terms, there are two types of sectors investors need to be aware of: economy sectors and market sectors. Let's first look at economy sectors. A nation's economy is divided into four sectors to help analysts and economists analyse and accurately interpret the health of the economy. Let's now take a look at each of them. First, let's start with the primary sector. This sector includes mining, agriculture, and forestry. It essentially includes any industries that extract raw materials and harvesting of natural products from the earth. Then we have the secondary sector. This sector includes production-focused industries such as manufacturing, processing, and construction. Then we have the tertiary sector. This sector is made up of service-based industries, including financial services, retail sales, and the entertainment industry. And finally, we have the quaternary sector. The fourth sector includes a different part of the service industry which focuses on business activity, including research and development, education, business consulting, and data collection. In an effort to standardise global industry definitions, Standards & Poor's and Morgan Stanley Capital International, MSCI, developed the Global Industry Classification Standard, GICS, also referred to as an industry taxonomy in 1999. Prior to the new standard delivered by the GICS, each nation had different variations of market sectors, making it difficult for economists to accurately compare one economy to another. The ASX in Australia implemented the GICS in 2002 to bring the Australian stock market in line with the rest of the world, and now our domestic market is segmented into 11 market sectors. The table that we can see on the screen lists the 11 market sectors and their ASX code. Here we have consumer discretionary, consumer staples, energy, financials, healthcare, industrials, information technology, materials, real estate, telecommunication, and utilities. These market sectors form the base of the entire stock market, and each of the individual companies that are listed on the ASX fall into one of these categories. You will remember in the previous section that we talked about the different investment industries that display certain types of behavioural characteristics at different stages of the economic cycle. Each of those industries can be categorised under one of these 11 market sectors, and it is not uncommon for some of the industry types in each sector that weren't listed in the previous section to also outperform the general market at different stages of the economic cycle because of the sector's momentum. Let's now break down the 11 market sectors and explain what each of them represents. Consumer discretionary. This is a category of companies that provide goods and services that are considered non-essential by consumers but would be desired if there was enough dispensable income available. These items can include clothes, entertainment, and holiday spending. Consumer staples. This sector includes companies that produce and sell food, beverages, and personal items to consumers. Different to consumer discretionary, these items are considered essentials by customers, with companies like supermarkets and chemists falling into this category. Energy. This is a category of companies that produce or supply energy, like gas and oil. This also includes companies that are involved in the exploration and development process, such as refining and drilling for oil and gas. Financials. The finance sector is a group of companies that provide financial services to commercial and retail customers. These services can include lending money, insurance, and investment advice. Companies that fall into this category include banks and credit unions, financial advisors, and insurance companies. Healthcare. The healthcare sector includes companies that provide any medical services to treat patients, as well as produce drugs and medical equipment. This can also include companies that provide medical insurance to consumers and rehabilitation and preventative care for patients. Industrials. Companies in this sector provide commercial and industrial equipment and services, as well as transportation and logistical operations to other industries. There is a large list of other industries that the industrial sector supports, like construction, airlines, railroads, and waste management. Information technology. This sector consists of companies that focus on research and development and distribution of technological goods and services to consumers and other businesses. Companies that develop software, manufacture electrical goods like computer products and smartphones, as well as home appliances and home entertainment, all fall under this category. Materials. The materials sector is comprised of companies who discover, process, and develop raw materials. These companies are predominantly involved in mining and refining metal and chemical products, including ore, gold, oil, and stone. Companies in the sector generally supply much of the construction material to other industries and rarely provide services to consumers. Real estate. This sector includes equity REITs, real estate management and brokerage companies, and is the newest addition to the GICS classification. Real estate-related companies were initially listed under the finance sector, but the growth and the importance of the primary equity REIT and real estate warranted a new sector headline. Telecommunication. Companies in this sector provide the infrastructure and service for consumers and business to transmit voice, data, audio, and video across the globe. Companies in this sector include fixed and mobile phone operators, internet service providers, as well as cable and satellite businesses. And finally, utilities. This sector comprises of companies and organisations that provide services like water, electricity, and gas to consumers and other businesses. Although many companies are privately owned, some utility companies are owned or regulated by the government to ensure that the public service nature of this sector is maintained appropriately. Now that we have seen an overview of what each sector represents, it should be easier to see why certain industries perform better than others during the different stages of the economic cycle. The GICS can be seen as an overview of the nation's whole economy that represents each type of good or service available, and it makes sense that the different sectors will require particular economic conditions to perform efficiently. Now let's take a look at some of the major companies listed under each sector. Now that we have a good understanding of what each of the 11 sectors represents, let's take a deep dive on the companies listed on the ASX in Australia and which sectors they belong to. The tables that we can see on the screen display the current top 50 ASX listed shares by market capitalisation in each of their respective sectors as at the 1st of September 2019. It is important to note that these shares listed are the current top 50, and these can change due to fluctuations in market capitalisation rebalancing. Now, it is interesting to observe how underrepresented the Australian market is in the telecommunications and information technology sectors from a market capitalisation standpoint. Of course, if we were to cast the net wider to include the top 200 companies, we would see a greater representation for these sectors. The table that we can now see on the screen shows the weight for each sector for the top 50 companies by market capitalisation. Now, given the magnitude of some of the companies inside the financials and materials sectors, it shouldn't come as a surprise that these sectors make up more than 50% of the market cap, highlighting the importance of portfolio diversification. But more on that in the next module. Let's now look at sector comparison and analysis. Now that we know the differences between each of the sectors, we can start to break down the stages of the economic cycle they perform well in and compare them to sectors that are also expected to perform well in the same stage. As an example, if we have identified that the market is in a peak phase of the economic cycle, it would be advantageous to compare sectors that traditionally perform well in this phase, for instance, healthcare and utilities. If the healthcare sector was looking stronger than the utility sector at the peak of an economic cycle, investors have a chance to apply a heavier weight of healthcare stocks than utilities to try and achieve a better performance. Another way to compare sectors is again applying the economic phases as a guide by looking at the next phase to identify the weaknesses. As an example, we now know that historically, utilities perform better in the contraction phase than the financial sector, and the reverse happens at the trough. By applying sector analysis, an investor is potentially able to spot an increased performance in the financial sector and a decreased performance in utilities. This type of analysis helps an investor confirm when the phases may be shifting to get in early and potentially capitalize on an entry into financial stocks and exit or decrease holdings in utility stocks. Now let's look at using technical analysis to confirm sector strength. One of the best ways to analyze the health of a sector is to apply technical analysis to the sector itself. Although fundamental analysis can be carried out on individual sectors, the information isn't as easily processed as technical analysis signals, and comparison between sectors can be problematic. Earlier in the section, we listed the 11 market sectors and their ASX codes. When you type in the individual sector codes in your trading platform, a chart displays in much the same way it does for a share. This allows an investor to carry out analysis based on technical signals to determine the strength and weakness in a sector. We can see an example on the screen, a weekly candle chart of the utility sector. Further, most trading platforms allow investors to compare different sectors overlaid on the same chart. The example that we can now see on the screen displays the financial sector with an overlay of the utility sector and the material sector on a weekly chart. Now this is a very powerful resource, as investors can see at a glance how each sector is performing relative to the other sectors in the GICS. Another great comparison is using the S&P ASX 200 index and overlay the different sectors on the same chart. Comparing sectors to the index is pivotal to isolate how each sector is tracking compared to the index and can offer clues on potential changes in the market dynamics. The example that we can see on the screen is a weekly chart of the ASX 200, the healthcare and financial sector overlay. Notice how at the end of 2007 and the beginning of 2008, the XAO began a steady decline into the contraction phase during the global financial crisis, but as expected throughout a contraction, healthcare continued to perform well. You'll also notice that the finance sector underperformed even the index from the economic peak right through to the contraction phase, which helps highlight the importance of sector analysis. Because we know which sectors perform well historically through different phases of the economic cycle, this type of analysis can be invaluable to investors who are trying to rebalance their investment portfolios for optimal performance. In this lesson, we have learned what a market sector is and how they can be useful to an investor. We've learned about the 11 GICS sectors in the Australian domestic market. We identified the major companies that are categorized in each sector. And finally, we learned how to analyze the health of a sector compared to other sectors. This concludes section 2 of the fundamental analysis module. In the next section, we will learn how to determine the value of an individual share using fundamentals like price to earnings ratios and earnings per share data.